Question number 21. What is risk? How the returns are connected with the risk. And friends, let me give you simplest definition of risk. Simplest definition of risk. What is risk? A risk is nothing but uncertainty. Risk is equal to uncertainty. Where there is an uncertainty, there is a risk. And that is the simplest definition for the risk. And as an investor, whenever I experience uncertainty, I would always like to get compensated for that uncertainty, because that uncertainty is going to give me a risk, and that is why I would like to get rewarded for that risk. And that is how the returns are connected with the risk. Let me explain this little more as to why uncertainty is risk. And that is because, let me give you an example. You are accepting an or your order, or you are supplying goods to a customer worth 10 crore. तो आप एक कस्टमर को 10 करोड़ का माल शिप कर रहे हैं, है ना? और 4 दिन के बाद आपको लगता है किसी कारण से कि वो कस्टमर आपको पे कर भी सकता है और नहीं भी कर सकता है. So that means there is an uncertainty in the customer making you the payment. Now please remember, this is a risk. This is a risk. So you are shipping a consignment to a customer and you are taking a risk because there is an uncertainty that customer may pay you, may not pay you. But after 10 days, you come to know that this company has become bankrupt, and this bankruptcy is a confirmed news. And therefore, tell me, is there any uncertainty of you getting the payment? And the answer is no, because there is a certainty that you will not get the payment, and therefore now there is no risk. What you have a loss. You have a loss. So when there is an uncertainty, there is a risk, and when there is no uncertainty, then there is a loss, and that is what we should remember and understand. So risk, simplest definition is uncertainty. Question number 22. What is systematic risk? Very simple. Very simple. So basically there are two kinds of risks which are there, and those two risks are, number one, systematic risk, and number two, unsystematic risk. How do you differentiate between the systematic risk and unsystematic risk? And the answer, of course, is very simple. Systematic risk is the risk which is arising out of the system. Systematic risk is the risk which is arising out of the system. Meaning what? Meaning there is an inflation. So inflation is what? It is a system. There is a recession. Recession is what? It is a system. There is the government likely to increase the rates of taxes, and those rates of taxes are going to be applicable to all the companies. So systematic risk is the risk that arises as a result of the system, and that is why it is called as systematic risk. And I am sure you can very easily understand, systematic risk will affect all the companies in that economy. Systematic risk will affect all the companies in that economy. And therefore, systematic risk cannot be diversified. Systematic risk cannot be diversified. Why it cannot be diversified? Because it is a risk arising out of the system. Everybody is impacted, and therefore this risk cannot be diversified. There is another risk, and that is known as unsystematic risk, and I will answer that question when I come to that question. But for the time being, remember, and just remember this: what is systematic risk? Systematic risk is the risk that arises out of the system, and that is why it is called as systematic risk. And systematic risk, since it affects everyone in more or less equal degree, and therefore this risk cannot be diversified. That means you cannot minimize this risk by doing anything that you would like to want. Question number 23. Can the systematic risk be diversified? If no, then why not? And I've explained, systematic risk cannot be diversified because it impacts everyone almost in same degree, and since it is arising out of the system, there is nothing that you can do against the system, and therefore you cannot diversify a systematic risk. Question number 24. What is unsystematic risk? Now, unsystematic risk, remember, is a risk which is not a systematic risk. Meaning what? Meaning unsystematic risk is a risk which is not arising out of the system or not arising as a result of the system. It is a risk which is peculiar to a particular company or to a particular industry or to a particular group. And that is what is unsystematic risk. Question number 25. Can the unsystematic risk be diversified? And the answer is yes. Unsystematic risk can be diversified. So, if you make if you belong to a particular business group, right? If you belong to a particular business group, and if you make all your investment into one single product or one single industry, of course, you will be exposed to unsystematic risk that may be peculiar to that particular industry. But if you make your investment in different products, different markets, different industries, you will be able to diversify your risk. So what is diversification of risk? Diversification of risk, in simple words, is not to put all your eggs into one basket. So unsystematic risk, of course, can be diversified and not the systematic risk. Question number 26. How do these impact the beta? यानी कि systematic risk और अनसिस्टेमेटिक रिस्क का बीटा पर क्या फर्क पड़ता है, किसी कंपनी के बीटा पर क्या फर्क पड़ता है? आंसर ऑफ कोर्स इज वेरी सिंपल और आप सभी समझ भी गए होंगे. सिस्टमेटिक रिस्क इज impacting all the companies in that particular industry or in that particular economy. Since it is impacting all the companies in the more or less same degree, and therefore systematic risk will not impact beta of a company. इन्फ्लेशन है, रिसेशन है, सारी कंपनियों के लिए है, सारी इंडस्ट्रीज के लिए है, एंड देयरफॉर what will happen, the returns of all the companies will go down. Okay, there may be some small variance here and there, but that's going to be very minor, and therefore systematic risk will not impact the beta of a company, but unsystematic risk will definitely impact beta of a company, and that is why one would always try to diversify the unsystematic risk. So remember question number 26. Once again, let me repeat. Unsystematic risk, no impact on the beta. Systematic risk, definite impact on the beta. Question number 27. Does the CAPM give you an accurate cost of equity for a given company? क्या आपको कैपिटल एसेट प्राइसिंग मॉडल ये आपको एक्यूरेट कॉस्ट ऑफ एक्विटी बताता है? यानी कि जब आप CAPM मॉडल को यूज करके कॉस्ट ऑफ एक्विटी वर्कआउट करते हैं, तो क्या ये जो आपने कॉस्ट ऑफ एक्विटी वर्कआउट करी है, क्या ये एक्यूरेट कॉस्ट ऑफ एक्विटी है? एंड द आंसर ऑफ कोर्स इज नो. एंड व्हाई द आंसर इज नो? आंसर इज नो बिकॉज अगर मुझे ये मालूम करना है कि CAPM जो कॉस्ट ऑफ एक्विटी दिखा रहा है वो एक्यूरेट है कि नहीं है, उसके लिए मुझे क्या मालूम करना पड़ेगा? उसके लिए मुझे मेरे पास में कॉस्ट ऑफ एक्विटी कंपनी की क्या है वो होना चाहिए. देन ओनली आई कैन मेक अ कंपैरिजन. So I do not have the cost of equity. That is why I am using CAPM model, and therefore please remember CAPM does not give you accurate cost of equity because there is nothing called as such as cost of equity. CAPM model gives you a cost of equity which is highly dependable, reliable, as much accurate and precise as it can be, and that is what is your CAPM cost of equity worked out with the help of CAPM model. Question number 28. What is YTM? Now friends, remember YTM is another very important number that all of us need to be totally familiar. And why totally familiar? And that is because the way you use internal rate of return in case of evaluating a project of organic growth और इनऑर्गेनिक ग्रोथ, यानी कि जब एक आप नया प्रोजेक्ट डाल रहे हैं और वो प्रोजेक्ट की वायबिलिटी को मालूम करने के लिए, या अगर आप कोई कंपनी का टेक ओवर कर रहे हैं तो उस टेक ओवर का वायबिलिटी मालूम करने के लिए यू विल यूज द इंटरनल रेट ऑफ रिटर्न टू टेक अ डिसीजन. Same way, when you are taking decision about the fixed income securities, the way you will use IRR for taking decision about organic and inorganic growth, for taking decision about the fixed income securities, you will use YTM. You will use YTM, and that is what is your yield to maturity. YTM, yield to maturity. क्या मतलब है इसका, और मैं आपको एक्सप्लेन कर दूं. YTM का मतलब ये है, YTM इज अ रेट at which if you discount all future cash flows on a fixed income security, your NPV will be zero, or your present value of all future cash flows discounted using the yield to maturity will be equal to the current price of that fixed income security, and that is what is YTM, and that is your question number 28. Question number 29, is YTM सेम एज IRR? क्या YTM और IRR एक हैं? एंड द आंसर ऑफ कोर्स इज यस. आंसर ऑफ कोर्स इज यस. द ओनली डिफरेंस इज, जब आप ऑर्गेनिक प्रोजेक्ट की एवेल्यूएशन कर रहे हैं, इनऑर्गेनिक एक्विजिशन का एवेल्यूएशन कर रहे हैं, the term that you will use for reference, or the rate that you will use for reference for taking a decision about capex, that is known as internal rate of return. And when you are taking a decision with regard to a fixed income security, the reference number that you will use is known as YTM, that is yield to maturity. और मैं आपको बता दूं, आगे जब हम बढ़ेंगे तो हम ये एक एग्जांपल करके भी देखेंगे कि YTM को कैलकुलेट करने का फॉर्मूला और IRR को कैलकुलेट करने का फॉर्मूला दोनों एक ही हैं. बोथ फॉर्मूलाज आर सेम, एंड देयरफॉर YTM is same as internal rate of return. Question number 30, can YTM also be taken as cost of capital? And answer of course is yes. And why the answer is yes? YTM can also be taken as cost of capital, because YTM is nothing but a cost of capital. It is a reference rate that you use for the purpose of investment decision making in the context of fixed income securities. तो चूंकि मैंने आपसे पहले कहा in the context of question number 29 कि YTM and IRR सेम है, इसका मतलब क्या है? इसका मतलब ये भी है कि YTM can also be taken as a cost of capital. As a matter of fact, YTM is used as a reference point for the purpose of decision making in the context of investment in fixed income securities. And that's your question number 30. And now let me make it open to all of you. In case if you have any doubt, any question, any clarification that you would like to seek from me, you are most welcome.